Imagine if the cost of your dream home dropped by $50,000 overnight, a dramatic price cut that seems almost too good to be true. But that's exactly the bold promise behind Trump's new housing plan. With one sweeping executive order, this policy aims to cut through layers of red tape, speed up construction, and make homes more affordable for millions of Americans. Whether you're a first-time home buyer struggling to break into the market, a current homeowner weighing your next move, or simply curious about how this change could reshape the real estate landscape, you need to hear what's coming. In the next few minutes, we're going to break down every angle of this plan. We'll explore how it promises to slash costs, the key changes it's driving in the housing market, and even the potential pitfalls that could complicate the picture. Is this a revolutionary step towards solving our housing crisis, or are there hidden risks that might end up costing more in the long run? Stay with us as we dive into the details behind this policy shakeup. Trump's housing plan is set to shake up the market in ways few of us ever imagined. At its core, the plan promises a dramatic reduction in home prices. Think about a $50,000 cut on that dream home you've been eyeing. This isn't just wishful thinking. It's a bold promise laid out in a sweeping executive order that aims to cut through layers of red tape that have long driven up housing costs. According to the order, these extra costs come from endless rules and approvals that developers and builders have to face. In fact, the claim is that these burdens can add as much as 25% to the price of a new home. By slashing these regulations, the plan intends to deliver what it calls emergency price relief during a time when many families are feeling the squeeze from rising living costs. This isn't a slow, gradual change. It's an all-out effort to make a real, fast impact on the housing market. Let's break down the key objectives behind this ambitious plan. First up is the promise to cut the red tape. The idea is simple. Remove unnecessary bureaucratic hurdles so that developers can build faster and cheaper. Think of it as taking a shortcut through a maze of paperwork and approvals. When these barriers are removed, the cost of construction drops, and that saving can be passed on to home buyers in the form of lower prices. Next, the plan focuses on boosting the housing supply. Over the years, many construction projects have been stalled by endless delays and complex regulations. By fast-tracking these projects, the government aims to get more houses on the market sooner. More homes mean more choices for buyers, and ideally, a more balanced market where prices don't skyrocket out of control. The third major goal is to give an economic boost to workers in the construction and building trades. With fewer delays and lower costs, builders can take on more projects. This isn't just good news for developers. It means more jobs and better opportunities for workers who have been left on the sidelines. More jobs in construction could mean a ripple effect throughout the economy, helping to lift communities that have long struggled with high unemployment and slow growth. This plan is painted as an urgent remedy to our housing crisis. It's meant to tackle a problem that has been building up for decades, a situation where too many families have been priced out of the market. By cutting costs, speeding up construction, and creating jobs, the order promises to set off a chain reaction that could help millions of people find affordable housing. But as promising as all this sounds on paper, it's important to note that this is a bold and complex shift in policy. There's a lot riding on the assumption that reducing regulations will indeed lower costs without creating unforeseen problems down the road. Critics are already questioning whether such drastic cuts might end up favoring big developers over small local builders, or if the quick fixes could lead to problems like reduced building quality or even environmental risks. Now that we understand what the plan aims to do, lowering home prices by removing costly hurdles, speeding up stalled projects, and boosting construction jobs, let's explore how these changes are supposed to work in practice. What are the actual mechanisms behind these promises, and how might they play out in the real world? Let's dive into the next section to get a closer look at how this plan intends to transform the housing market. Trump's plan relies on a few key ideas to make home prices drop and construction move faster. First, the plan wants to cut through all the confusing rules that slow builders down. You see, when a builder wants to put up a new house, they have to follow lots of rules and fill out many forms. All these steps cost extra money and time, which then makes the house more expensive. By removing or simplifying these rules, a process we call deregulation, the plan aims to save builders money. When builders save money, they can lower the cost of the homes they build. This is the first part of the plan, making it easier and cheaper for builders to get started. Next, the plan calls for fast-tracking construction projects. Many building projects get stuck in a long line of approvals and waiting periods. Imagine trying to start a race but having to wait at every checkpoint. That's what many builders face today. With fast tracking, the government promises to speed up the approval process. This means that projects which once took years to start can begin much sooner. The hope is that more homes will be built in less time, which should help bring more options to the market and keep prices from rising too quickly. The third piece of the puzzle is changing rules about energy and climate. Under current policies, builders must follow strict rules to protect the environment. While these rules are important for keeping our air and water clean, they can also add extra cost and delay projects. Trump's plan suggests that by easing some of these environmental and energy restrictions, builders could reduce their costs even more. This part of the plan is very controversial. Supporters say that lowering these rules will help lower home prices and speed up construction. Critics worry that it might lead to long-term harm for our planet or hurt our communities in other ways. These three ideas, cutting red tape, speeding up projects, and relaxing energy rules, are meant to work together. The idea is that if builders can work faster and spend less on extra costs, they can build homes at a lower price. But each step comes with its own challenges. For instance, if the rules are cut too much, builders might not have enough oversight, which could affect how safe or sturdy the houses are. If fast tracking means skipping important checks, then the quality of new homes might suffer. And if easing environmental rules goes too far, we could see problems with pollution or damage to local areas. In short, the plan promises to remove many of the barriers that slow down home building today. By making these changes, Trump's plan hopes to lower the cost of new homes quickly. However, it is a delicate balance. Each mechanism, whether it is deregulation, fast tracking, or rolling back climate rules, needs to be carefully managed to make sure that the benefits truly help everyone. With all these ideas at work, the next question is, how will these changes affect the housing market in the real world? Let's take a closer look at the numbers and the potential risks as we move forward in our exploration of this bold new plan. When it comes to the economic and market impacts of this plan, things get both exciting and a bit tricky. On one hand, by cutting the red tape and speeding up projects, the plan is expected to bring a quick drop in home prices. Imagine walking into a house that normally costs a lot less now because builders saved money by not dealing with so many rules. This could mean that at least for a short while, buying a home becomes much more affordable. However, there's a twist. That price drop might not last very long. If too many people rush in to take advantage of the lower prices, demand could skyrocket and push prices back up, perhaps even higher than before. Then there's the issue of tariffs. Trump's hints at reintroducing tariffs on things like Canadian lumber could throw a wrench into the works. Lumber and other building materials could suddenly become more expensive, which would eat into any savings from cutting regulations. Think of it as taking 2 steps forward and 1 step back. Builders might lower costs in one area only to see a rise in another. History shows us that when tariffs were reintroduced in the past, prices did indeed go up. This means that even if the plan starts off with a promise of lower prices, those gains might vanish as the cost of materials climbs again. Looking back at similar moves in previous years, we see that market reactions can be unpredictable. When similar policies were tried before, the benefits were often short-lived because the market adjusted quickly. Buyers rushed in, supply could not keep up, and then prices started climbing again. That historical context suggests that while the plan's promise of immediate relief is appealing, the long-term picture may be more complicated. All these factors, the initial drop in prices, the possible rebound due to high demand, and the risk of rising material costs from tariffs, create a mixed picture for the housing market. It's a case of promise versus pitfalls. The promise is clear: lower prices and faster construction that could make homes more affordable for many people. The pitfalls, however, include the risk that these benefits might only be temporary and could even lead to higher prices later on if demand spikes or if tariffs drive up building costs. In short, while Trump's housing plan might kickstart a market shift by lowering prices and boosting supply, it comes with risks that could undo some of those gains. The real test will be how well the market can absorb these changes without causing a rapid surge in prices once more. As we weigh these promises against the potential pitfalls, the next step is to look at who stands to win and who might lose in this grand experiment. Let's now explore the winners and losers and see how the political drama and market forces might play out in this evolving housing story. Trump's housing plan is stirring up a lot of excitement, and not everyone is going to benefit equally. Let's break down who might be the big winners, who could end up on the losing side, and how some unexpected political drama is adding to the mix. For starters, big home builders and large developers seem to be in the best spot. With fewer rules to slow them down, these companies can get their projects off the ground faster and build more homes for less money. This means they can make more profit and even pass some savings on to buyers. Existing homeowners and property investors might also benefit in the long run if faster construction leads to more market activity and rising home values. And then there are the workers. With new projects moving ahead quickly, construction jobs could see a boost, which is good news for families who have been waiting for more work opportunities. But not everyone stands to win. First-time home buyers and renters might find themselves in a tougher spot. Even if home prices drop at first, that benefit might only last a short time. Imagine if everyone rushes in as soon as prices dip. Demand could spike, and before you know it, prices might start climbing again. Smaller developers who don't have the same resources as the big companies might struggle to keep up in this fast-paced environment. They could be pushed out by larger firms that can more easily handle the rapid changes. And then there's the issue of environmental concerns. Critics say that by easing rules on energy and climate, the plan might save money now, but could lead to problems like pollution and longer-term damage to our communities. The political drama adds another layer to the story. New appointments and unexpected figures are shaking things up in key government agencies. For example, the appointment of a new HUD secretary, who is known for his ties with opportunity zones, has raised questions about whether his approach will favor private investment over the needs of everyday home buyers. Then there's the buzz around the CFPB, the Consumer Financial Protection Bureau, with even Elon Musk weighing in on its future. Musk has even suggested that the bureau might be shut down, which could change how mortgage rules and consumer protections work. These moves have many wondering if the plan is truly about helping people or if it might just favor big players in the market. All of these changes come with a fair share of controversy. Some say that cutting regulations too quickly could lead to shortcuts in building safety and quality. Others worry that the political appointments are more about making headlines than making lasting improvements for families. With big companies ready to take advantage of a faster, cheaper way to build and small buyers and renters left on the sidelines, the debate heats up even more. In short, while Trump's housing plan might bring big wins for builders, investors, and workers, it also carries risks for first-time buyers, smaller developers, and even our environment. This mix of benefits and potential pitfalls, combined with the political drama swirling around new appointments and policy changes, sets the stage for a housing market that could change dramatically in the coming years. As we move forward, it will be crucial to watch these shifts closely and understand how each move in the political arena might tip the scales. Up next, we'll take a closer look at how these changes might play out in different parts of the country and what that means for you, the everyday homeowner or future buyer. Let's now look at how these changes might play out in different regions and markets, because not every area is affected in the same way. In some of the highest regulation hotspots, think cities like San Francisco, Seattle, Boston, and parts of New Jersey, the cost of building homes has long been driven up by endless permits and strict rules. These areas have seen huge delays and extra fees, which can add up to a lot of money over time. With Trump's plan aiming to cut through this red tape, these markets could see the fastest changes. Home builders here might finally get a break, and buyers in these expensive cities could see some relief, at least for a while. But as soon as prices dip, the high demand in these cities might bring buyers flooding back, which could push prices up again sooner than expected. Then there are some surprising impact zones where the effects might be just as dramatic, but in a different way. Take places like Boulder, Colorado, or Austin, Texas, for example. These markets have not always been in the spotlight for high regulatory costs, but they are growing fast and could feel the push of deregulation. In these areas, easing restrictions might open up new opportunities for builders and investors, and buyers might find that the market shifts quickly as new homes pop up and prices adjust. These regions could be the first to feel a sudden change, giving early movers a chance to snap up a deal before the market settles. Looking at the bigger picture, the housing market has been dealing with a big shortage ever since the 2008 crash. For years, the number of new homes hasn't kept up with the growing demand. This plan is supposed to help fix that by speeding up construction and lowering costs. But even with faster building, it will take time to catch up with the needs of all the buyers out there. The challenge is huge, and while this policy might help close the gap a bit, many experts wonder if it can really make a long-lasting difference in a market that has been starved for homes for so long. With these regional differences and long-term challenges in mind, it's important to understand that while some areas might see quick wins, others could experience a roller coaster of prices and supply. Up next, we'll shift our focus to what you can do right now if you're looking to buy, build, or sell a home in this changing market. Stay tuned for some practical tips and advice that can help you navigate these ups and downs. With all the shifts in the market, here's some practical advice for anyone looking to navigate these changes. Whether you're buying a home, building one, or considering selling, let's break it down. If you're planning to buy a home in the near future, timing is everything. The initial price drop might make homes seem more affordable, but that window could be very short. As soon as prices dip, expect a surge in buyers looking to grab a deal, which could push prices back up quickly. If you've been eyeing a property in a high-regulation area, places like San Francisco, Boston, or Seattle, keep a close watch. These areas might offer a brief period of lower prices before demand causes a rapid rebound. So if you find a deal in one of these markets, be prepared to act fast. Research the neighborhood, know your financing options, and don't wait too long, because what looks like a bargain now could vanish as soon as the market adjusts. If you're in the construction or development business, this plan offers both opportunity and risk. One of the best moves you can make right now is to lock in the prices for your materials. With hints of tariffs coming back on items like Canadian lumber, costs could rise unexpectedly. Consider negotiating long-term contracts or even pre-purchasing critical materials like lumber and steel to shield yourself from sudden price hikes. In addition, use this period of deregulation to streamline your building processes. Get familiar with the new fast-track approval processes and adjust your project timelines accordingly. This could be a golden opportunity to kickstart projects that have been on hold, and by acting quickly, you might secure lower material costs before the market reacts. If you're thinking about selling your home, now might not be the best time to jump into the market. Although the promise of lower prices might tempt you to sell quickly, the long-term outlook for real estate, especially in supply-constrained areas, remains strong. Instead of rushing to sell, consider holding on to your property for a bit longer. In some cases, it might even be wise to convert your home into a rental. With the ongoing housing deficit, rental demand is likely to remain high, and this could provide you with a steady income stream while the market continues to adjust. Of course, if you absolutely need to sell, pay close attention to local market trends and try to time your sale when buyer interest peaks, which might happen when there's a noticeable dip in prices followed by a surge in demand. By keeping these strategies in mind, you can better position yourself in an unpredictable market. Whether you're buying, building, or selling, the key is to stay informed and be ready to move quickly when the right opportunity presents itself. It's all about balancing the promise of lower prices and faster construction with the risks of a market that might bounce back faster than expected. Up next, we'll sum up the big picture of what this means for the future and wrap up our discussion on Trump's bold housing plan. Stay with us as we look at the final thoughts and what you need to keep an eye on moving forward. In summary, Trump's housing plan is aiming to shake up the market in a big way. The policy promises to cut home prices by slashing through the red tape that has long driven up costs, speed up construction by fast-tracking long-delayed projects, and even boost jobs in the building sector. However, as we've seen, these promises come with a set of risks, ranging from a short-lived price drop that could be quickly undone by surging demand to the potential for rising material costs due to tariffs and a rollback of environmental rules. It's a bold experiment with big rewards and equally big pitfalls. So, what does this mean for you? If you're a buyer, you might have a brief window to snag a deal in high-regulation areas before prices bounce back. For builders and developers, locking in material prices and streamlining your processes could be key to staying ahead. And if you're a seller, it might be worth holding off or even considering renting your property instead of rushing to sell, as long-term market trends continue to favor supply-constrained markets. Now, we want to hear from you. Do you think these changes will make housing more affordable in the long run, or are the risks too high? Drop your thoughts and questions in the comments below. If you found this breakdown helpful, please give us a thumbs up and subscribe to Econowise. We're here to keep you informed and ahead of the curve as these policies unfold and impact the housing market. Stay tuned for more updates and expert insights on this evolving story. Remember, being informed today can help you make better decisions tomorrow. Thanks for watching, and as always, stay informed, stay prepared, and keep building your future.